Hi people, let's go back out there. Hi people, welcome. What I want to be showing you today is called the 5 candle breakout and how you can use this. Now it's very similar to actual indicators I use inside my gold. So if we go over to my gold, you'll see that I use a breakout. These are these breakout things here, right? So if we just drag this across like so, open this up, you'll see that I use certain breakouts. Okay, now we're going to be using a scalping technique, which is going to show you how you can get into the market and out of the market. And I'm just going to give you a little bit of a demonstration very shortly. Okay, so we're just going to pop that back so we know where that is. We're going to use a trading, well, I can use any platform actually, to be honest with you. So what we're going to do is we're going to jump over to here. Let's use this one here. Okay, so we're using this one here at the moment. So you see that this is actually a live funded account which I'm using at the moment. This is actually a live account. Okay, so this is a real money account. So what we're going to do is we're going to use, what's great about this is you can literally use this on any chart. Okay, so say for instance, let's use it on oil. Okay, and what we're going to do is we're just going to move the chart into place. We're just going to have a little play. Let's just neaten it up a bit. Okay, we'll open this up so you can see it. Right mouse click. We're just going to neaten this up. Okay, and we're going to set this on a 5-minute window. It's going to give us a little bit of what we're working with. Okay, and we're just going to bring it in a little bit higher. Okay, and we'll bring this in a little bit like that. Okay, so this is a live account. Okay, now what you're doing when you are using the it's called a 5 candle breakout. Okay, what we basically do is we use EMAs as well, which is exponential moving average. Okay, now to get an EMA is very easy. It doesn't matter if you're on MetaTrader 4 or MetaTrader 5. Okay, it doesn't matter what platform you're going to use. Okay, I'm going to show you the tricks and how we're going to do this. So we're going to move over to insert, then we're going to go to indicators, then we're going to go to trend, and then we're going to look for moving average. Okay, so this is this one here. Then we're going to set it up as exponential. Okay, so it's set up with exponential. Then we want a period. Okay, now the periods that we're using are 7, 14 and 21. So we're going to use number 7. Okay, and we're going to, for argument's sake, leave this as red because it's easy. Okay, and we want this to apply to close, and we want to hit OK. Okay, so we've now got our first line. All right, now we're going to get a next one. Okay, so all we do is we go back to insert, go back to indicators, go to trend, go to your moving average, click on this again. Now if you were using trading view, you will have a limited amount of indicators that you can use. When you're using your own MT4 account, MT5 account, you don't need to worry about how many limits. You can have as many indicators as you like. Okay, because you pretty much, it's your platform, so you can do what you like with it, right? Okay, so we're going to use 14 on this one. You can see how it's actually remembered as well. And we're going to change this color to a light blue, okay, or turquoise, okay, and hit OK. And you can see now that these are movements in the market. Okay, now by now you might be wondering what EMA is. Okay, so an EMA is an exponential moving average, 7, 14 and 21, which is what we're using. I commonly use moving averages in technical analysis to smooth price action and identify trends. Here's what each of them represents. So the EMI 7 is a short-term moving average that reacts quickly to price changes. It's also useful for identifying short-term trends and momentum shifts. EMA 14 is a medium-term moving average that balances responsiveness and smoothness. It helps filter out noise and provides confirmation of trend direction. Remember, trend is our friend. EMA 21 is a longer short-term moving average that provides more stability and helps confirm how strong the trend is. Okay, so that's just going over what that is. So what we're going to do now is we're going to add in our last EMA. Okay, and we're going to use a green one for this. Okay, so we're going to go back over to insert, indicators, go to trend, moving average, and we're going to pop in 21, and we're going to use our favorite luminous green. Okay, because then it's going to stand out. I'm going to click OK. So now what we've got now is we've got this set up here. All right, so this is how you set up the buy. All right, so you're looking at the buy. So just remember, just to clarify, so you want to set up your 3 EMAs, okay, which is exponential moving average, 7, 14 and 21. Then you want to wait for the condition in the market. This is when the candles are away from the 3 trend lines, okay. As soon as one of them touches the trend line, and this went straight through, it penetrates straight through, okay, this was very bullish, then you count 5 candles, okay. So what you do then is you want to count your 5 candles. So this, what you do is you go 1, 2, 3, 4, 5, right? And you work from the top. So in fact, you want to be, let's move out of the way. You want to move that there, and you want to move 5 candles back. So it's actually that way, okay? Because this hasn't happened yet, right? This is the future. This is the past. We can only go by a history of what we're trading, okay? So we go from where it's broken through, you count the same candle, 1, 2, 3, 4, 5, from the highest point to the lowest point, and then you put in your buy stop, which is this one here, right? Like so. Now you've got your point. Okay, and then what you do then is put a buy trade, and then I would have this probably three pips. So this is in at 73053. I would have this, so it comes out at 0. So this would be 73. I'd have this at 73. I would do this probably by about 300. So I'd put allowance of 300. So 73, 300, which is going to be roughly up here. Okay. This point here, so you're still going to be in the money on this bit here. Okay, now what do you do when you do a bear trade? Same thing. Okay, so we've got a bear trade. So if we look at where the candles have moved away, this one here, right, so these are away from the candle. This one here, it penetrates through this candle here. Okay, so this means now that we're setting this up for a bear trade. So you go 1, so including this one, 1, 2, 3, 4, 5, okay, going back. So you set this one up. Remember, this is our 5th candle at the lowest point, so it's this one here, like that. Okay, and what this means is as soon as this line here, this is our sell line. Okay, so this is our important line, this one here. Let's change this to blue. Sell. So we are waiting for this candle here to break this line. When this line breaks, this is when we're going to have our sell stop, okay? And this is when we're going to have our sell trade. We ignore this. We ignore this line, okay? Because we're only concentrating on sell only, okay? And the idea is as soon as this line here, this is when we're going for our sell. And then we would probably work again by about 72300. Okay, so what we're looking at is 72907. So we're going to end this trade at 72820, which is going to be roughly somewhere around about here. Okay, so this is going to be our take profit margin. This line here is our stop loss. And that is how you do your 5 candle breakout. Okay, you count back. So what you do is where it comes down in the buy. Okay, you get to this point here, it's left, it goes back, it goes past these trend lines, then you count 5 candles back. So 1, 2, 3, 4, 5. So this one here, okay, is going to be where we're going to create our actual buy stop. So if any candle goes past this, okay, we are going to actually put our trade for that, right? We're going to actually start to energize our trade. If it fell down here, right, and it didn't touch this line here, this is great because the trade would not have activated. The same as where we've done this one here, okay, and you see that this left the line, this left the line, this one here has gone through the line, okay. If it went up, doesn't matter because we haven't allowed our trade. It's a sell trade only that we're set up for on this line here, right? This is our sell line here. So this is why it's important to use the 5 candle profit thing, because it works well. The five candle breakout, okay. I've used the 5 candle breakout. This is going to be profitable because it works by waiting until you break through the actual trend lines on the 7, the 14 and the 21. You can actually do it if it breaks through the 7, which is, this is a 7, this one here is 14 and this one's 21, right? So you know, it's as soon as it breaks through a line, and normally what you find is if it penetrates through the line like this one did, this is normally an engulfing point of this is going to go up big time, which it did. You see, look, we see this candle here, right? Engulfing candle, okay? And then this one here, this is a bear. This one here, this one's an engulfing candle pushing down, right? So it's showing you the market's going down. And what you do is you want to target, because this is oil, you just work on 0.300 and that will be more than profitable. That's it. That's the end of this video. Until my next one. Thank you.